All right, example five is example five and no, just example five. So I have two problems under example five. So I'll look at the first problem under example five. This is a bit of a different style problem. So notice that rather than give you the blow by blow of every transaction that happened over the period of time, over a period of time, I simply provide you with some financial statement data for that would be reported for a company reporting across 2 quarters. So basically, we have Links, which is a company, and it's quarter 2 and quarter 3 results. And the first question asks you to determine the amount of receivables reported in Links Enterprises accounts receivable account as the adjusted trial balance on 6/30 and 9/30. So it's asking for what was the accounts receivable balance at basically 6/30, which would be the end of the second quarter, and 9/30, which would be the end of the third quarter. So we're looking for really 1 quarter's differential here. And it's going to be helpful to put that side by side with your ACL account because it ultimately affects what we see on the financial statements. So let's look at these financial statements. We have an income statement for both quarters with very specific accounts highlighted. Not at all how you would see one in the real world. There would be other pieces there, of course. Here is the balance sheet, and it's reporting accounts receivable net of allowances of 38.7 and 45.3 on at the end of the second and third quarters. And then on the final page, you have an extraction from a direct method statement of cash flows, which almost never occurs in reality because companies use the indirect method. But we got cash collections from receivables. So this is all providing me some information to fill out my accounts. This very first piece, this very first question, determine the amount of receivables reported. This is testing whether you understand what this number is, like how it was formulated. And remember that from your notes, from the book, this is always at the net realizable value. So, what is the net realizable value? It is what we anticipate we can ultimately, the dollar value, the true economic value we're actually going to get from the receivables. This is not the amount in the accounts receivable account. Okay. It is the amount in the accounts receivable account after we have subtracted the balance of our ACL account. And so it's telling you here, yes, this 3,250,000 is net of the allowance for 6/30. So this is net of the ACL balance that we do not think we're going to be able to collect. So putting that into this piece here, that's 3,250,000. Oh, I'm sorry, oops, wrong place. Putting that in, right? This is my net realizable value, $3,250,000. And that equals what my receivables balance is after I've taken away the $38,700. And so all I need to do in order to figure out what the balance of my AR account is add that allowance back. So that would become 3,208, 200. Yeah. I'm sorry. I'm dying on simple math right now. 8.7. That took me just a second because I kept never mind. So yeah, 3,288,000. $3,887,000. 3,208 3 million. I can do this. $3,288,700. There we go. Get my brain online here. All right. Same thing here. That's the net realizable value after I've subtracted off the balance of my allowance for credit losses. And so if I add that across to my 2,910,000, I'm going to try to redeem myself here. $2,955,300. Look at that. Actually came out correctly the very first time. So these are my two balances. This is where I started because it's at the end of the second quarter. This is where I ended up. It's at the end of the third quarter. 3,288.7 and 2,955. All right. This comes from, of course, I evaluated the balances of my ACL account, which were given to me straight here and here. Started at 38.7, ended at 35.3. So really what this problem is, or this part of the problem is understanding this is net realizable value. And net realizable value arises from taking, in the case of accounts receivable, my total balance of all customer accounts I have and subtracting off the amount that I believe will end in default that will not be able to pay me back. All right, so now that we have the right balances set up, the next piece says, if Lynx reinstated $1.4 million of customer accounts, what was the dollar value that it wrote off during quarter three? So we're looking for the amount that it wrote off. And a write-off consists of debiting my ACL and crediting my accounts receivable. So really what I'm looking for is how much did I debit ACL by? How much did I credit accounts receivable by? How much did I debit my ACL balance by? And how much did I credit my accounts receivable balance by? Well, you might say, well, okay, yeah, just take the difference here and that'll give me my missing piece. But we had $1,400,000 of reinstated accounts during the period. So a lot of people got their accounts reinstated after they had been written off. Remember, the reinstatement entry is to debit. I'm sorry, I had a momentary thought somewhere else, is to debit my accounts receivable and to credit my ACL. So basically, what I'm doing is just using T accounts and a working knowledge of journal entries to figure out where things should go. And then another part is, okay, well, that is the reinstatement. Is there a cash element involved? Well, did it say we collected cash? Let's see. They reinstated. So we don't have an indication of the cash collection, yay or nay, at this point. But we can now determine what this must be, right? We can't just take 45.3 and subtract 38.7 to get our amount because there were other factors at play within this ACL account to come up with this balance. And in this case, we're still missing one player. Okay, what else affects allowance for credit losses? Remember, this is my adjusted trial balance amount. This is an adjusted trial balance amount. So these have already been adjusted. If they're not adjusted, then we couldn't have seen them on a balance sheet. Okay. Technically, they're also the post-closing balance because we don't close assets or contra assets. So their post-closing balance won't change from 38.7 to 45.3 either. But I was kind of trying to give you that key here that it's an adjusted trial balance. So we must have had an adjustment. And remember, whenever we have receivables, we have to adjust for bad debt. Well, how can we figure out how much bad debt we adjusted for? Let's look at our statements, right? Well, here it pops out bad debt expense, 26,000 for quarter three, $35,000 for quarter two. But which one do we want to take? Or do we take an average? Right? No, we don't take an average, and we only want to take one. The one that we want to take is the one that will describe the process of going from the June 30th to the September 30th amounts, right? So the income statement versus the balance sheet, right? This is the end of the second quarter. This is the end of the third quarter. This is during the third quarter. Remember, this is not at a specific day and time, but it captures an entire period. This is during the second quarter. So which of these columns happened between 6:30 and 9:30? And just like looking at the dates, 7/1 to 9:30 versus 4/1 to 6:30, I hope you recognize that really it's this bad debt expense that happened during quarter three. In terms of understanding what happened between the balances on these two particular dates, we only want to look at quarter three information. Okay. And that quarter three information tells me I had $26,000 of bad debt expense. Remember, that would look like a debit to bad debt expense and a credit to ACL for 26,000. That reduces my net income. This reduces an asset. So that'll be 26,000 here. Now, finally, those are the other two things that affect ACL: reinstatements, adjustments for bad debt, and finally my write-off. So I can now math and solve for the write-off. I started with 38.7. I added 1,400,000 to that amount. I added 26,000 to that amount. And then I had to subtract an amount to get to 45.3. And so after doing that math, I come to 1,419,400. This is the amount of my write-offs. Okay. Then my write-offs are also connected here. Because remember, how do I write off an account? I debit ACL for an amount, the same amount that I credit my accounts receivable. And so now I can place this piece into my accounts receivable account. So I know this is the missing question mark balance. Now, what it's asking me is um, the final piece. What is the amount of credit sales made by Lynx during the quarter? Well, what do credit sales look like? Are we going to be looking for a debit in our accounts receivable or a credit? Well, remember, credit sales are a debit to accounts receivable, a credit to sales revenue. So I'm going to be looking for a debit amount in this case. This is where my answer to part C will come from. But what else do I have to consider? I have to consider collections from customers, any cash I got from my receivables. I also have to consider that write-off, which landed in there, any reinstatement and recovery amounts. I have to consider any amounts that I might have recovered from the reinstatement, but it looks like I have recovered all of my reinstated accounts. And so that would have just been 1,400,000 here and 1,400,000 here. So then all you need to do is grab the collections piece and then solve for your amount of credit sales that must have gone in as a debit on your accounts receivable. Okay, so try through that. It's basically working backwards with some knowledge about what goes into these accounts. Another thing I find super helpful at this point is to know what goes into the T accounts as much as you can write every journal entry for a transaction. You should be able to write, the primary accounts that are being manipulated in your accounting, and then be able to describe the transactions that land debit and credit wise. So over here, I would have credit sales, those debited. Any any reinstated accounts go on the debit side. Reinstate a past write-off. On the credit side, we have collections. We have write-offs. And of course, recoveries, which are just collections on our reinstated accounts. For our ACL, we have bad debt adjustment. And that actually happens after we get an unadjusted trial balance amount. Prior to that, we could have reinstatements affect the ACL with a credit. And we also have write-offs as, I'm not going to fit it in very well, but we have write-offs over here on the debit side of the ACL. So having a working knowledge of where things hit and the balances they inform, because for example, in the ACL case, you have certain transactions that will only affect the unadjusted balance prior to bad debt. And then you have one adjusting balance that will take your unadjusted balance to an adjusted balance for your allowance for credit loss account.